video.
YouTube, back with another video. This video is going to be covering a loss that I did on Wednesday. So let's get right into it. So it's in gold on Wednesday. On the daily, we could see that it is extremely bullish. Why? First, because the previous day, on Tuesday, it broke the rejection of this fair value gap right here. And also it respected this new bullish fair value gap. So I've marked this area of opportunity from this intermediate high to this intermediate high. This is an intermediate high on lower time frames, mind you. And I tried to get involved in the market as soon as possible. Now, I was too eager to enter because I was very bullish on this, and we'll see why this was a loss. So the only thing is that on the 4 hour and on the 1 hour, I couldn't find any confluence to get involved. But I knew that the higher time frame was indicating a strong bullish continuation. So with that said, you can see in the 4 hours, there's not much we can justify an entry with the price action. If we go down in the 1 hour, it's the same. We can't really see anything that would justify an entry with my strategy. The only thing I could argue here, looking back to it, is that this bearish fair value gap is currently being disrespected with the 8 hour candle. So once it closes at 9 a.m., I would mark the high of this and then look for a run on liquidity in the 1 minute. So two bullish order flow legs being respected and creating new highs towards this high, and then eventually those highs as well. But this is not how I entered the market, unfortunately. I was very eager to enter, so I went in the 5 minute and looked for some confirmation on lower time frames in my area of opportunity in order to enter the market. So let's go in the 5 minute. So here's how I entered the market. So you could see that there's a clear rejection and resistance at the bottom of the area of opportunity. So let me just exit that. So once it created this break of structure and create those two bullish order flow legs, that's when I decided to enter the market. But the problem with this, there's a few problems with this, but the problem is the time frame confluence with the 5 minute is the 4 hour. And this is very important because there was nothing on the 4 hour like we looked previously. We didn't find anything, any valid arguments to get involved in the 5 minutes. Now, usually when the daily is giving you a lot of confirmation and a lot of price action that can justify an entry, you want to look in the 15 minute, which I did because I had a very strong bias and I was a little impatient. So let's go back in the 5 minute. So this was my entry. So first, you can see that this fair value gap with this break of structure right here. This was the first fair value gap that I marked, and I was paying interest to the break of structure again right here. So a break of structure is when a trend is not being respected. So here you can clearly see that we have this new lower low being creating with the lower high, new lower low, lower high, and then here we fail to create a new lower low, and we create a higher low. This is called a break of structure. So I've marked this in confluence with the fair value gap being created. Here it's been respected. Let me just change that real quick. And then we have the second order flow leg. So the reason why I didn't enter at the close of the third candle is because it was a very, very big movement, and I wanted to see if it was going to retrace in that big candle and respect it before entering. You can definitely enter at the close of the third candle, but me personally, when there's big movements like this and we just fill out this gap on the left side, I wanted to see if it was gonna react to that fair value gap. So it did with this candle, and that's where I entered. And here's what made me lose this trade, because I had the right direction, and you'll see later on that it liquidated me, but it ended up being a winner. But because of those mistakes, I lost that trade. So here, with that strategy, the run on liquidity, I have multiple strategies, but the run on liquidity, the entry is very, very objective. There's no subjectivity. So it's two order flow legs, and you put your stop loss at the bottom of the second order flow leg, which in this case would have been here. This is the second order flow leg bottom right here. Let me just put this so we can see it clearly. And then the first one is right here. But the thing is, because it was such a big movement, this is a lot of points if you're looking at it like from here to here. It's practically 7 points, which is pretty high, especially with gold as well. It's a big stop loss, and I didn't calculate my contract sizes, and I put bigger than I would have hoped for. So instead, I put it right underneath the fair value gap, thinking that it was not going to retrace into it. And that was the first mistake, to be honest. The contract size was not accurate for this trade. Like when you have bigger stop losses, you should reduce the contract size to always risk what you're comfortable with. So that's what happened. I put my stop loss beneath this candle just a little bit around this. And I had my first target. Another thing that happened as well, but that was out of my control, is market manipulation. I trade in the micros, and the micros are super, they're super manipulated, because look at, no, not here. I'll just put this here. So that was my initial target. And you will see, I'm in trading view right now. You will see that it touched the trading view, but in my broker on micros, because this is not micros, obviously, it never touched. So that was the second thing that happened that made me lose the trade, because I would have probably taken some contracts and let some runners, and would have been stopped at break even, and that would have been the end of it. But it is what it is. You can't control that. It happens all the time in micros. That's just how it is. You just gotta adapt, and it's fine. Because from the get go, there's so many things that I didn't respect, but I'll explain that later on. So first of all, my stop loss wasn't at the right point. This should have been here. That's the first thing. But because of the contract sizes, I did not put it at the right place, thinking I would be fine, and fuck around and find out. So, yeah. So here's how it went out. If you want to go, there, boom, 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 and just stop me out right there. So that was it. That's why you have to respect your plan. Always stick to your plan. But here's the thing also is, because it's the daily. Now look what I should have done. Look what I should have done. Because it's the daily, I know that the time frames confluence, the daily is paired with the 15. So I should have done is wait more patiently. And look what the 15-minute did. Created this fair value gap, this first bullish order flow leg. Let me take all of this out just for the purpose of the exercise right here. Let me just take out the session too, just annoying. So boom, this would be my first bullish order flow leg. You wait. And then what happens is boom, you have your second bullish order flow leg respecting the other one. So this should have been my entry, and this should have been a longer trade. And that would have respected all my rules for a run on liquidity. So this, for example, I enter here at the close of the third candle, and then I can aim for those highs at the beginning, but you'll see that it did eventually reach the high of the area of opportunity. Sorry. So yeah, this is just a lesson to show you that you need to respect the time confluence. It's super important, and you cannot jump in a trade even if you're sure or you strongly believe it's going to go in a direction. You still need to find a proper entry, and you still need to show some patience. So yep, that's about it for me for this video. Thank you for watching, and I'll catch you on the next one. Thank you.